first, good for you for making it through the 2021 tech sell-off. If you're a millennial investor, a lot of the names that we know and love have been hammered over the last 2 to 3 months, just day after day of 5, 10, 4% sell-offs, and we're just hitting this correction deep in the market. And the most frustrating part about this whole thing is that if you look at the S&P 500, right, that's one of the things I'm most bullish on, right, is putting your money in that long-term and your long-term investments like your 401k and just letting that sit. So if you look at the S&P, we're literally at all-time highs, and here you are sitting with your Lemonades, your Pelotons, your Palantir, and you're getting crushed. So that is doing the exact opposite. So the difference here being large cap is very much value. So these are things that have PE ratios around 20. These tech, they're all based on future earnings with high growth potential. So their PE ratios are massive. PEs is price to earnings. It's literally just the price market cap of the stock divided by the earnings that it makes on an annual basis. These can be as high as 200. So there's a bunch of stuff that's driving this particular sell-off. One, inflation. Two, concerns about future valuations once inflation takes place. But really, it can be very frustrating. So what can you do right now to position yourself and take advantage of this and not get continually pummeled by it? So number one, something I did personally is if you have index funds or let's say airlines, right, and you bought during the 2020 dip and you say, hey, I have an opportunity here to that stuff. If you take a step back and think to yourself, okay, you want to buy low, sell high, right? So in general, I'm not bullish on airlines long term. They're a very slim margin company, tons of competition. There's not a ton of growth there. So that's money I knew I was investing in that 2020 dip. And we're at well highs almost, if you look at Delta, American, Spirit, they're all at or where they were pre-pandemic. So again, if you look at index funds, the S&P is at its couple percentage points off its all-time high. So this you could see as your reserves. And what I mean by that is you might not have cash because you kept buying this dip and the dip kept coming and coming and coming, but you can actually sell these off because they provide you capital to reinvest in your high growth stocks to take advantage of these once in a lifetime opportunities. Because if you're a long-term investor and you have a 5-10 year time horizon, betting on these high growth names is going to pay off tremendously in the long term. Not right now. You're going to be looking at your Robinhood or your Fidelity account and be scratching your head as what the heck's going on. But so that's exactly what I did. So I literally sold my airlines and my index funds. And another trick is sell your ones that are long-term capital gains, because then you're going to vastly reduce your tax liability when it comes paying tax on the gains that you got on these. So find out whatever reserves you have that are relatively at a peak and invest in your high conviction, high growth names, because these multiples have been compressed significantly. So this gives you a really good basis to actually invest and capitalize on this to build that wealth and springboard your portfolio once this market rebounds. Because eventually these things are going to sell off so much where they become bargains again and people sell off their value and go into growth. So that's the general strategy. So what do you do if you don't have reserve type funds that you can sell and put in the things that have been crushed? Really, there's not a ton. Number two, I would say just stop looking at your portfolio. If you have no more cash to invest and it stresses you out like crazy, remember you're a long-term investor and don't look at your portfolio, because that'll help you stomach this massive volatility in the market right now. And those are really the main things to have here. Really try to focus on Warren Buffett, right? If you were buying these stocks at twice the price, you should be very excited about buying these stocks at half the price. So think of this as a great opportunity, long-term, strategize, find your cash reserves, reinvest that into these names that were crushed, and really try to only do that to the stocks that you have long-term, right? You've held them for at least a year. Then you drastically reduce your taxable liability by about roughly half by taking advantage of long-term capital gains. So hopefully this helped. Get through this. It could be another month, could be another day, could be 2 months. I don't think it's going to be longer than this summer because the economy is rip-roaring. There's just so much bottlenecks from a supply chain that's really driving inflation. I really do think it's short-term. Hopefully we get this pipeline fixed so gas prices don't go up and then force all other products to go up. But I think we're in a good place overall. The market is set for growth. The economy is starting to roar back once, especially the global economy opens up and meets America in the sense of cases going down and the society returning back to normal. So hopefully this helped you. If you like this content, if you got some value, I'd appreciate if you give me a thumbs up. Also share this video with anyone who's going through this headache right now, because we'll get through it, and if we take advantage of it, we're going to be much better off because of it. Thanks for tuning in to Live to Learn USA. Take care.